Oh, we're live. We're live, Jennifer. Merry
Oh,
Christmas.
yay. I'm thinking about all the baking I have to do.
Oh,
It's a big
really?
baking day.
And I'm thinking about how I'm going to clean all of this. You can't see it. Won't show my hands. I'm clean all of this. My baby grand that's not
Yeah.
mine. All that. Yeah. In my virtual world.
Okay,
Then we're
Lance
thinking
Buffet.
about jumping on a bus and driving to Florida for a couple days. See
Oh,
Jennifer's mom. Maybe come back through Pensacola or something. So we'll see.
okay. We're going to
How's your week
Texas. I
been?
don't We're going to
I bet you've
Texas.
had a stressful week.
Yeah. Just, I'm it's hard splitting time between two places and then planning holidays and got to go down to Texas, which I'm excited that we get to do that and um then all my family's coming in, so I think I'm having 16 overnight guests, which I have the sleep space. I would like one more bathroom. That would probably be a good thing. But
Well, you can call the Porta John place and just have put one right up there on the concrete, and
yeah,
it's out back.
yeah, well, the guys don't even need that. Just back 40.
Absolutely. Yeah.
Welcome to Tennessee. Um, we want to add a garage off the bonus room, family room, and connect it
Okay.
by a breezeway. And I want to do a shower bath there, like the whole bathroom be tiled and have like a hook to hook the dogs up to and spray them down and have an extra shower and extra toilet on that end of the house. And then upstairs, I'd like to have like just like another bonus room that's a huge, just sleeping loft. Because we're pulling the RV up to hook it up. The My nephew and my sons are sleeping out there,
There you go.
but it's got heat, so
Well, in the future, yeah, that can just be like the big gathering room for everyone, and then the dogs
mhm.
can go out and get in the lake and then wash them off before they come in and stuff like that. That would be
Yeah,
perfect.
yeah.
The breeze, I
So
like that. And the breezeway, like I said, you can put a porta potty there, and then you have two extra bathrooms.
right.
If you need this, I actually have one that it's like one just that pops up and has a
Oh yeah.
door. Then you can put a bucket. If you need one, just let me know.
No, I know what you're talking about. Yeah, those camp toilets. Um, well, speaking of toilets and crap shows, you and I were going to talk about loans today, and particularly, we talked last week about or last time about getting keeping Christmas in the picture when you're paying off debt. But, how many times have we talked to someone and they're like, "Oh, I'm not ready to buy a house yet." And we're like, "Oh, okay, what's going on?" They're like, "Oh, I got to save up. What amount? 20%." You don't.
Or
"Oh, I've got to pay off all my debt." Now, so I'd like you, just those are, I think, the two top myths of home buying. So address the percent down first. And then I want you to address, like, should you jump in without direction and just start willy nilly paying things off? We'll talk about both those. And then we'll talk about other things that we've seen people or heard of people doing, like through close connections that you're like, they did what?
that's just going to be big. We're going to go through the 10 commandments of lending, but I do want to address one of them is not save up 20%. That is not on the list here.
Yeah.
But Jennifer brought up a good point. There's a lot of people think and still think that you have to have 20% down to get a conventional loan or any kind of loan. Not the case. You can put as little as 3% down on a conventional loan if you're a first time home buyer. Oh my gosh, Lance, you're going to have mortgage insurance if you do that. In some instances, you are going to have mortgage insurance. Mortgage insurance is an insurance policy that ensures if some reason the loan were to default, that the investor is going to get some of their money back. Not all of it, but some of it back. And years
And the
ago,
investor is the person who loaned you the money to buy the house.
ultimately owns ultimately owns the paper that was lent.
Yes.
And that can be many people removed these times. We live in a world of arbitrage where meaning that the person making the transaction, there may be two, three, five levels deep at that very moment. Did you know, Jennifer, that when you lock a mortgage rate, when you lock a conventional mortgage rate or an FHA mortgage rate, that the futures of that note actually start trading the moment you click the button?
Huh.
And if for some reason that loan doesn't close, being a realtor like yourself, you've had houses that fall out under contract. Somebody's got to pay for those lost earnings. And that all happens in the background.
Mm.
So now that I've become a broker, I'm learning a little bit more about some of the idiosyncrasies that go on in the background. But but there are penalties to not deliver. When you click that button and lock, you are saying, I'm bringing you this loan, and it literally starts to trade. That's
Yeah.
insane. That's our world. It's real time. So no, you don't have to put 100% down. You can put as little as 3% down if you're a first time home buyer. If you're not, if you're a veteran, you can put
Nothing.
0% down. Okay. Oh, wait a
Yep.
second, Lance. I know there's all types of zero down payment, no money down conventional and FHA loans. Not exactly. Okay. With an FHA loan, it's still going to be 3.5%, but there's going to be some sort of gift funding, either through a loan, which is a lien
Yeah.
against the property, or a true gift or grant from somebody. But with FHA, with VA, when you qualify as a veteran, 0% down.
Yeah.
Great negotiating with a realtor.
Oh, but you have no skin in the game. Don't get me started. I'll have a whole rant.
If you have a good realtor like Jennifer, she understands how to really get a veteran in. It's not 0% down doesn't mean it's not going to cost any money to get into a mortgage. 0% down means that the loan itself you don't have to put a down payment, but there's other things that come with the loan.
And let's qualify that too. They can put down money if they choose.
If they'd like, absolutely.
And why would they do that? To buy a more expensive house? Like if they qualified to 300, but they had 25,000, they buy 325. Is that how that works?
Yeah, perhaps.
Or if they, the other thing that sometimes people don't understand is the appraisal gap. A veteran can bring to the table, if the house appraised at 300 and they have the extra 5 because the contract says 305 and the seller won't budge, the veteran can bring the 5, right?
Yeah.
Yeah.
We just have to, we don't run into that very much, but we just have to bet where the money's coming. Get that? Where the money comes from. Okay. So
but a lot of times but again, with that, Tidewater, that's the only loan that the appraiser, if they don't see the number coming in, they call the agents and they're like, help me help the veteran see the number you came up with. Why did you allow him to offer 305 on a house that I only see comps for 300? And then you can have that conversation. You could look at the square footage. Is it off? Did they comp it against, one time I had comped against Track Builder and it was a custom home. Anyway.
So these are good points. Jennifer is an expert at this. So other things that are going to be on top of a loan would be your closing costs, which would include getting an appraisal, getting an inspection to make sure what you're buying is worth it or safe to be buying. Taxes due to the state or the county, setting up escrow. So in that case, they're like, oh my gosh, how much is that going to be? Well, Jennifer can help you with that, but explain how much that might be. But also, she can help negotiate so that the seller might pay that for you. Right now, it's a little bit of a buyer's market. A buyer with Jennifer can go in and negotiate, and you literally can walk in with maybe just your earnest money, and maybe even get that back. So that's something, Jennifer, you should do a session on that. Talk about Tidewater. Talk about some of the things you've learned about veterans. I mean, you've done 100 of those loans, and one of your children is in the military, and you worked with them on that. So we'll have to cover them in a later.
Yeah, for sure. I have some old rants on my YouTube channel from 2020, and they are highly viewed. There were 3 or so of them about VA loans, so go check those out.
10-4. Right. So no, you don't have to have 20% down. And you were like, well, you've got to have mortgage insurance, Lance, on a conventional loan. Isn't that expensive? It really isn't anymore. It's really been refined. The risk rating and risk levels for mortgages are very fine-tuned right now, and you'd be surprised how little they are. So let's have a conversation about it. So let's talk about some of the other. Let's talk about.
Well, really quick on that too. One of the things I tell my buyers is, if you have 3 or 5 or 3.5, whatever percent you need for your loan, go ahead and get the loan, because then you're not just scrimping off what you can from your income or by selling things or what have you. Your house is now working for you. The equity gain historically across the nation is what, 3 to 5%. In Middle Tennessee, it tends to run 5 to 7, even during downturns in economics. During good times, Middle Tennessee can be 7 to 15%. And I'm not talking COVID. It's just, it's a good equity rise. I can't guarantee that, but there's trends, right? So if you buy your house today, we're going to do some history major math. You buy your house for $100,000 today with your 5% down. So you have 5% equity. It goes up 5% again next year. Now you have 10% equity. By the end of 3 years, you could refinance and drop off PMI or you could do it quicker if your house goes up more quickly or you have more additional funds to put towards it. There's like to make extra payment, one extra payment a year, look up the amortization tables, but let your house do some of that work for you. And that's the other thing I said, and I'm saying it again because the president had a speech recently where he's going to be addressing in January, it sounds like, some changes to housing and loans, and I'm curious to see what that is. But if he does do something to make housing more affordable, I want my people to be on the front side of that wave because there's so much pent up demand. So if you see that rates are going to be dropping, now is the time to be getting yourself mortgage ready. So that if they start dropping in February and March, you are on that first wave. Because as demand goes up and more people are qualified, then shortage of housing is going to take place too. Same thing if you start seeing them do a 50-year mortgage or anything that makes it more affordable. There are so many people on the sideline. Be in the front wave for your first purchase or your next purchase, whichever. All right. So what are other 10 commandments?
Well, I want to add to what you were just saying. I mean, you should be planning. If you're planning on doing anything next year mortgage-wise, you should be planning now. You need to find out where you are today, enunciate where you want to go and build a plan, which involves a realtor and a lender, and maybe a financial planner too, like Mark, who's not isn't joining us. Not maybe, and a financial planner as well. All right. One of the first ones that pops up is thou shalt not change jobs, become self-employed, or quit your job.
But the other one is take a promotion that now gives you bonuses.
Right. Change your pay structure. Yeah. Do not change anything about your job until you close. You can do whatever you want after you close. But if you're going to decide that you're going to, if you tell me I have to make it, annotate what's going on. Oh, I'm going to quit my job next Thursday and go self-employed. I have to annotate that. That's going to change the risk that this loan could be proven on. So
I had a friend, Lance, at the closing table. This young girl is signing. She's like, bought a new car yesterday, told my boss to kiss mine. And they're like, what? We can't sign these papers.
And so
my friend was the agent. They're like, what?
People watching this are probably like, what? Who would do that? A lot more people than you think. A lot
furniture.
More people than you think. I get called, I mean, last year, 3 or 4 people. This year, 3 or 4 people that midway are like, hey, so let you know I'm changing jobs. And I'm like, whoa, what? Yeah, it pays a little bit less, but it's not going to be full time. It's going to be 32 hours a week, or it pays more. It's 30. I'm like, oh, wait, that's part-time employment.
Yeah.
So
or the base is less, but I'm going to be making more overall because I get bonuses and I get commission.
Oh, yeah.
Can't count that for 2 years.
Until it shows, yes. That's a whole conversation. What we should be an income session. All right, number 2. You just said it. Thou shalt not buy a vehicle, else you may be living in it.
So can I tell you an example from one of my clients on that?
Yeah.
New construction. We contracted in January. It was going to be done in April. And in March, he, in his truck that he needed to use for work, was hit, not his fault. And he was super tight on his income to debt ratios. And he could not find the truck with the features he needed in his income to debt structure. And I said, well, the person who hits you is required to replace your vehicle with a like vehicle. And he's like, yeah, they're only going to do it for 30 days. I said, no, because you can't find what you're looking for. And that's not a lie. You cannot find a car that meets your needs financially and everything else. I said, now, that's all on the mortgage's paper. But once you close, if you were to go out and get a different car that you know that you could afford to make payments on and still make your house payment on, that's a different thing. Right. And so I said, you ride out the insurance rental of the person who hit you until after close. And when I explained it like that, he was like, oh.
Yeah, it happens. I mean, people, they'll go and buy a vehicle.
Yeah.
It happened.
This was not a willy-nilly. He was like, I don't have a choice. And I'm like, you do.
Yeah. See, that was, I didn't have a choice, but I can't count on both hands how many people along in my time were buying a new home, new construction, nice neighborhood. It was awesome. They were excited about what they're going to do, and they went out and bought a new Cadillac.
Yep.
At 800, this was a long time ago at $800 a month. Now the average car payment, by the way, is $1,175 in
Yeah.
America. They go out and if unfortunately, Jennifer, a lot of people, it seems like a lot of people go all the way to the edge of what they can afford. That's not the loan officer. That's not me. I'm not at all presenting that. It's highly illegal and unethical. But people are like, what can I afford? I'm like, that's a loaded question. And I know you help people with that because there's a lot
Yeah.
of other things to think about when you talk about what can I afford.
Target and
But in many
bullseye.
cases, when we get a loan approved, it in many cases is around 45%, 44% debt to income ratio. If you go out and buy a large thing like that, it is going to ruin the approval. And there's no way around it. Well, I'll just take it back. Well, you try that, A. And B, you're going to have to pay off that note. And it's well, I'm gonna it's hard to do that. So that's rule number two. Rule number three, thou shalt not become late on any payments. Um, that comes up. People are like, well, I know I'm going to refi. I'm going to refi. I one of the in a refinance, like if it's a cash out, people are paying off something. They're like, well, I know that's getting paid off next month, so I just decide not to make the payments this month.
We had a client whose wife did that. Do you remember?
No, I know a lot of
She
people have.
was, I'm not sure she was on page with wanting to move.
Ah, yes. Now I remember that part of it.
Uh-huh.
Yeah.
And you told me like, "Oh yeah, she's not been making payments." And I said a whole bunch of military adjectives.
About the FAFO. And sure enough, yeah, that comes through. So how would we know that, Jennifer, how would we know if they had a late payment? So right before we close, 10 days before we close on any loan, a lot of loans start out, especially with you and I, they start out 90, 120 days out because
Yep.
we're coaching people. They've come to you and me on a trusted referral. Call Jennifer. She's gonna really go. For example, Jennifer, you sit down with people. What do you call that?
A
First,
buyer's orientation.
a buyer's orientation. I've never heard a lot of other agents talk about a buyer's orientation like you do.
Like,
It's so important to you. Say it again.
because I'm so good.
Yeah. I mean,
I just don't want my buyers to fail. So I go
right.
through, hey,
Watching
these are
people
ways you can
watching
shoot
this,
yourself in the foot.
she gets upset about it. And
Yeah.
she's like, I have not done the buyer's orientation. We were supposed to do it. I gotta do it.
Yeah.
And once we do that, then we can get people on the right page. But so when I say that, sometimes it's 60 days from when Jennifer makes the introduction. We have some people it's 4 years. But
Yeah.
after we make the introduction, it might be a long time till that loan closes. So 10 days before, within 10 days, you can do it the day before. There's a soft pull that happens just to make sure that nothing materially has changed. That's where we find a car getting purchased. That's where we find something else I'm about to talk about might have happened.
Does
Um,
that mean that you can't use your credit cards at all during that month? Like if you have things set up on auto pay? Because that's not the
no,
case, right?
you can't, but you shouldn't buy anything or charge anything over $250 without talking to your LO. It's okay, Jennifer.
It's Christmas.
Understood.
Just
All
teasing.
right. Um, number four, thou shalt not reduce account balances below what you've told or provided to your loan officer. This is the same as charging something
Yeah.
because paying something down, believe it or not, could hurt your credit. This blows people's minds away. So the credit bureaus make a score based on how you utilize your credit. How much of it are you using? How often are you using it? How are you paying it? What are you buying? Wait, Lance, Jennifer, it's none of their business what I'm buying with it. You're right. But what I'm talking about is are you doing installment loans? Are you doing payday loans, quick turns? How much revolving debt do you have? How much of those are mortgages? How many are there 6 autos financed? Those are things that go into the scoring. And when you tamper with or pay one of those off, it affects the scoring because believe it or not, the best scoring often comes from people that use their credit a lot, but pay
And
it
that's
down a lot.
because it shows the lender your willingness to repay your debt when you have it and your ability to manage your money. And that's what I tell people. That's what your credit score is. And then your income to debt ratio is, do you have the ability to have money to pay the loan?
And it's one of the most important acronyms in lending. You ready for this?
Hmm.
It's ATR.
Um,
Stands for ability to repay.
yeah.
So throughout the entire process, from the moment I make contact and you make introduction to me, in my mind, I'm thinking about the ATR.
Hmm.
I'm thinking about how that's going to populate into the loan. I've had people say to me, Jennifer, I'm going to get into a loan. I ain't never going to pay a first payment. I think that's a good thing or a bad thing? That's not a good thing. You
No.
know, back in 2008, we had the Great Recession and we had a lot of foreclosures. There were a lot of people. We didn't really have the internet. Oh gosh, I wouldn't even want to guess what it would be like today, Jennifer, because information can move around so quickly.
Oh,
But
yeah.
there was a lot of conversations back then, like in all levels of I ain't paying, they ain't gonna take it. And it happened again in COVID.
Hmm.
What am I gonna do? They ain't gonna take my house. Nobody wants my house right now. During 2008, I had very high end borrowers who are like, I made a payment for a year. Respectable people in the community. I mean, when this started to come to me, I was like, are you kidding me?
I would have an absolute coronary if I was even thinking along those processes. I would like,
It was
it's
big
like some of the
time.
women who marry for money and like divorce well. You're
That's
like,
why
dang, I wish I didn't have that integrity.
what, what became of that was TRID got reworked. Remember, TRID got reworked.
October 15.
The Graham the Graham Beach Lively laws. Everything's been turned upside down about how we do a mortgage now.
Yeah.
Um, you know what Jennifer does as a career is very complicated. You say, "Oh, everyone's a realtor."
I
Well,
swan around
everyone's
and
not.
I drink wine and open doors, right?
Right. Everyone is not a successful realtor. You on the left of me is a successful realtor. Being a mortgage officer, I'm just a little tiny piece of the whole thing. It takes 12 people to generate a loan after it touches me.
Yeah.
12 people. The litany and the stack of regulations that you've got to get through and disclosures and making sure that's all right because CFPB says you made a mistake. It's $1 million per instance.
Hmm.
How many mistakes do you think if they start looking in a file and we didn't have all this regulation, how much do you think they might and could find? A
Yeah.
lot.
That's why
And when
your
they
auditor
do,
and your processing department is so critical.
absolutely. And like you and I have talked about in the past, when there's as being a former service member that worked on the flight line most of my career, as I've always told you, when there's an airplane crash, it's not one thing that went wrong. Oh, it is layer after layer after layer after layer. In fact, it gets so obtuse that you're like, is this even possible? But
Yeah.
it is because there's so many checks to make sure there's not a mistake. And in mortgage, there's so many checks to make sure that $1 million fine waterfall doesn't start. Anyway,
And why is that? Because if mortgages are not done correctly, one off, okay, it's a pebble in a pond. But if you
yes,
throw 1,000 pebbles in a pond, it's going to cause a problem. And the problem it's going to have in mortgage lending is it could crash the economy, which
yes,
maybe we've seen.
yes. And I
Because that
love
was the
doing this for a
PNC
career.
paper.
And this is how I take care of my family. It's how you take care of yours. You have a passion for helping people.
Mhm.
Same here. Um, but it's the only thing we make in America. Yes. Oh, we make cars. Really? Where do they make that? That we laundry money. That's a play on words. It
I know.
is the housing cycle is what's kept America really up and flourishing. It's kind of installed for a couple of years. So we're really waiting for that to come back. And it's the regulations are protecting Americans. We're the ones who foot the bill for this. If there's another crash, you, Jennifer, and I, and everyone watching this, you're going to pay through this
Yeah.
because in 2008, when this all fell apart, do you remember? Did anyone go to jail? No. What happened? We bailed out everything and
Yeah.
we made a lot of rules. And I do agree that a lot of the rules were necessary. When it happened in 2008, I can tell you as a lender from 2005 to 2008, I was looking over my shoulder every day going, this is going to come apart. This is insane. You
Yep.
were too. You knew. We knew it
Yeah.
was coming. So
I
I
wasn't a
wasn't one of those
realtor
people.
then, but my
Your
ex
husband
was
was in
in
it.
BNC lending.
Yeah. We I wasn't surprised. I'm like, well, finally, I hope they clean this up. All right, let's get back to
Yeah.
I have
Yeah.
to short out at about 10
Yeah.
minutes. All right, don't pay things down. All right. Number five, thou shalt not forget to include debts on your application.
Told you I had a
There's no,
client who tried to hide their child support in Illinois when they moved here.
yeah, we'll find
Turns
it.
out they're going to find it.
Yeah. I don't like the name of this program that I'm about to tell you about. It's called Fraud Guard. And Fraud
Yeah.
Guard it is a, it's like a service like LexisNexis. You know what that is. It's like
Mhm.
a LexisNexis server that looks at the metadata, that looks at everything, that looks at AI, and it finds, and sometimes people forget, all right? Sometimes people forget that their mom gave them that piece of property in East Tennessee that's just, 4 acres, it's all overgrown. But what's that matter? Well, how much are your taxes on that? That
I
doesn't matter.
inherited a timeshare. Whatever.
Oh, that would be a horrible one to inherit because you'd have the annual fees, or worse yet, an assessment. So, sometimes people don't think about that. Every once in a while, I haven't seen this since 2022. It'll start up again when things really get fired up again with housing. A lot of people buy houses together. Couples will buy, hey, let's buy a condo in the Smokies together. Or let's buy a house in Myrtle Beach. Well, if one of the borrowers decides to refinance their house here in Brentwood, we're going to ask, well, tell us about the taxes and insurance on this property down in Myrtle Beach. Oh, someone else pays that. Well, it says you own it. Yeah, but someone else pays that. That's the agreement that we have. That's a hard thing to prove. That gets ticky tacky, and it's some. So as part of the my interview process, like Jennifer has uh,
Orientation.
her orientation. My orientation is the first phone call. And I spend a lot of time in that first phone call, just kind of digging around. Oh, where are you from? What do you like to do? So that we don't get surprises. Because even though that's a legitimate thing to come back to a borrower in 3 weeks from now and we discover that they forgot to tell us that it's a split property, you've got to ask those things. Even though it's legitimate to ask that in 3 weeks, nobody likes being asked that. Because the number
No,
one
and
thing
that's
you'll
why
hear
I
about,
tell my clients that getting a mortgage loan is like a proctology exam. You're going to be asked all kinds of questions because they're going to be loaning you hundreds of thousands of dollars. But they're also not going to ask you for anything that they don't need because they don't have
right?
time for it. They're not that interested in your scat pile.
So if I had a glove here, I'd do it, but I put on the glove and we have that in the conversation and I get them laughing about it. And I say, hey, there's going to be things we forgot about in a week. Now I'm going to call you. You're going to be like, oh, wait a second. He told me about this. I really spend the first conversation a long time going through, just warming people up, reiterating what Jennifer said about the proctology exam. But hey, it's going to be okay because I'm going to be the one with the gloves on getting dirty. You don't have to worry about it. Okay.
Yeah.
I'm going to bend over and take it when I hear it from the underwriters.
Yeah.
But really, I'm not because I'm going to ask all the questions up front. So that's one of the things is don't forget to tell people about it. And but Jennifer and I, we're going to find out because we really know who our clients are. All right. Number six, we just talked about don't buy a big ticket item. It says over $250. I mean, you can buy whatever you want with cash. Um, but sometimes when people buy a big ticket item, it digs into what their cash to close might be allowable.
Mhm.
So, um,
Sometimes you have to have reserves.
yep. And Jennifer, this is true. I mean, all of my clients call me. They're like, "Hey, I'm going to buy this washer and dryer." I remember Jennifer said, and you said to call you.
And I'm
I'll look
like,
at the
don't
file. I'm
do
like,
anything with your money or your job unless you talk to Lancerai because I want to make sure you're doing it the way you should.
People appreciate that. They know they're being protected. And
Mhm.
9 out of 10 times, I'm like, it's okay to do it. And then every once in a while, it's like, you're not going to be able to get that dishwasher until Tuesday, which is the day after we close,
Right.
because I
And that's the
need.
thing too. Like I may think I know how to clean a teeth because I've been to the dentist and I've seen dental hygienists. But there are things that they do that I'm unaware of. You may think you know the ins and outs of getting a mortgage because you've had one before, or God help us, your parents had one before 2015 and know everything about now, but you don't know and it changes all the time. So unless you're in it, listen to the people who are in it every day.
We got to hurry through these next couple because
Yep.
I got 5 minutes left.
All right.
Mark, join us yet?
We could.
We lost him. All right, here we go. Number 7. This is an important one. When you're standing at the Kohl's counter checking out, and the lady says, "Hey, if you open a Kohl's card today, you can save 30% on this purchase." Don't do it, because that's rule number 7. Number 6.
We
Thou
had
shalt
someone do
not
that too.
apply. Do not apply for credit anywhere until it's completed and closed, and that includes a credit inquiry. Like, for the great example, you're under contract to buy a house. Let's see what Jennifer has to say about this. In Middle Tennessee, people pull credit to open up utilities.
Yep.
And so what I've done when people call me with that question, if like one of the spouses is not on the loan, I tell them to do it in that spouse's name, or I say, we got to wait. If you don't get the loan because you made an inquiry about your gas bill, you don't have a loan. So you don't have to worry about paying this gas bill.
Yeah.
They're going to have to understand we'll have to turn it on that day. But that's come down. So you do not allow anyone to pull your credit without talking. Don't do it. No, I would say no, because it's going to affect
And
your score.
99% of the time, I have the sellers hold utilities until the day after close.
Yeah,
Unless we close on a Friday, which I freaking hate doing, so we're not doing it. Don't worry about it.
Number 8. Do not make unusually large gambling deposits.
Mattress money?
Yeah, do not make unusually large deposits into your account with consulting your loan officer. So what's an unusual?
2% above your norm.
I wonder if my wife's a processor. Jennifer, can you hear me? What's the percentage that someone cannot make into their deposits, into their accounts without causing a red flag? Is it 15% of their income? We're actually live on a Zoom call on a recording, but when people make a large deposit, what percentage of their income triggers problems? Is it 10 or 15%? Like if they make $7,500 a month, if they make a deposit of $750, it raises a flag. I think it's 10%. Thank you. My wife's a processor for another company.
So what do? You sell a car. Okay, fine. Have a receipt. You have mattress money. Fine. Use it for your groceries or your gas or something like that. There are
ways. That's a whole conversation too. Don't sell a car without talking to Jennifer or me, because if you do that and have a receipt, the onus is on the underwriter. We got to find out if that car was really worth what you sold it for. So we'll have to call your loan officer.
Yeah. I mean, it sounds silly, but just pause.
Yeah. You're just, yeah. How important is it to get that house no matter what? Call answer Jennifer.
Especially if you've already sold your old house or given your notice on your apartment, then you're going to be homeless.
Who would do that, Jennifer? Who would do that?
Editing.
Acrimonial editing.
Lots of people.
Last 2. Thou shalt not close or open bank accounts. Don't go. It's
because you can't track that history.
Say it again.
Can't track that history.
You can't track it, and they're going to track it. Where did that money come from? It just becomes a mess. Talk to your loan officer. Guys, you might be listening to this going, oh my gosh, no one's going to tell me how to live my life. It's for 30 days or 45 days. We're trying to save you trouble.
Isn't it like 60 days ahead of when you think you're going to be buying? You should just kind of chill out. Does that include transferring money from one account to another account, investment accounts?
Yes. I know you want to make it easier for the transaction coming up. Talk to me or Jennifer, because every time it moves, there has to be a paper trail, and it is proctolically looked at, whatever that
Grandma,
means.
I know you want to help me, but please don't deposit $5,000 in my account right now.
Oh gosh, please, or 10 times that, twice. All right. Oh, but yeah, I'm just be honest. I don't think this a client of ours, father, he found out his son was buying a house and was like, "Hey, I put some money in your account." He had access to it, and it was a large amount of money. And the son's like, "Whoa, what?" He knew these rules. He's like, "You can't do that, Dad." He's like, "Well, let me take it out then, and then I'll help Brooke Bliss." But we got to solve it. It was all good.
Yeah. Everybody was trying to help everybody, but just pause and talk to people who are in the trenches every day.
Number 10, don't be
and tell your family, like, don't be helping me right now until we talk.
So speaking of that, here comes number 10, Jeff. You're not allowed to drink while I read this one. Thou shalt not co-sign for family or friends.
Now, and
Unless
in all
you have to.
honesty, you do have to. I co-signed for my son, and it bit me in the butt. But here's what happened: because there was an easy fix, I just didn't realize it. I co-signed for Will because he was 2 points shy of his credit score because he only had a trade line of a car, which is a hint to get another like credit card, even if you use it as a money envelope. If you're doing Ramsey stuff, use it to pay for gas and groceries and pay it down to $25 or whatever. Because again, there's a utilization rate. So he was making all the payments on his own from his own checking account. So I go to buy my house, and there's a way that you can exclude that, even though I'm the owner of it, because he's making the payments from his own account. Except the account was the one he set up when he was 16 because he was 20 when he bought the house, and Mama had to co-sign on that account, and I didn't remember I was on that account. And so we couldn't prove that I wasn't involved in the money in that bank account. So immediately had him set up his own account that he was on, and he paid it for a year plus before I could refi, or, we could do that exclusion.
And that's something we'll be talking to you about. We didn't think about it at the time when we did it. And it's pretty impressive. Our son was 20 when he did this. 20 years old, and he has a ton of equity in this house. He's been a homeowner for 3 years. He did an FHA loan.
Yep.
He put down 3.5%.
Mm-hmm.
And one of the features of an FHA loan is when it goes down, when interest rates go down, if it goes down to 0.5% or better, you can do what's called streamline. And we recently helped him with that.
Yep.
And it won't
he
be
has
long.
2 roommates who help him pay the mortgage.
Yep. That doesn't go into the qualifying for it, by the way. Soon, he's going to have enough equity, enough income that Jennifer, mom, can get off of it and sign off on the next time we do a transaction. She can refinance off of it. And, a quick note, because her son makes the payments on time, even though it shows up under Jennifer, we ignore it because the person has a year proof of making the payments. You can't ignore it when you co-sign for someone trying to buy a house because you don't have the seasoning. But Jennifer, it's 12, it's something 33. And
10:33, you get around.
That was our 10 commandments. I thought it was a great session.
Yeah, for sure.
Guys, everything we said on there has literally happened to the both of us on the same files, not once,
or
not
somebody
twice,
that we know and we're like, don't do what they did. Learn from my mistakes or learn from someone else's before you have to make your own.
So everybody, Merry Christmas. I don't think we're going to meet on Christmas Day, but
no, I think we're probably not going to have a new one out until honestly the 12th of January, because when we record and when we publish. So we'll have a big hiatus. Maybe rerun some old ones.
Absolutely. We'll make sure we repost. Merry Christmas. Thanks for being with us. I often say this is our 3rd year of doing this, but Jennifer says that I'm crazy.
No, we're just now hitting the 1st year.
I think it started in 2023, but anyway, or 2024. But anyway,
yeah,
we love you. We appreciate you watching us. Keys to home. Go out and get some.
Yep. See ya.
Bye.